Harold Leishman. I'm a founding partner of LLC Private Wealth and a senior investment advisor at CG Wealth Management here in Vancouver. I'm joined today by Peter Londa, CEO of Tantalus Systems. We were fortunate enough to buy a block of stock a couple of weeks ago in Tantalus in the low 80s. The stock is now trading sort of 180-ish. The purpose of this video is to provide some insight to our clients as to why they own the stock, why they should hold it, and perhaps buy more if they deem it appropriate for their speculative portfolios. As many of you know, my role in the partnership is to lead the small microcap selection team, and we're always sort of focused on companies with low valuations, high revenue growth, with either big swings in EBITDA or the potential for a big swing in EBITDA in the near future. Now, Peter, from recent history, looking at the financials, you've been growing revenues a little north of 20%. Your current run rate's a little north of 40 million, and EBIT has gone from negative 4 million to break even or slightly positive over the last 6 or 7 quarters. And those losses were principally driven by your $10 million investment in your latest offering, TrueSense Gateway. So for the benefit of our clients, which I stole from Peter's website, Tantalus provides remote monitoring and control systems to over 300 electric utilities worldwide by integrating advanced sensors with remote communications and analytical software. Tantalus helps utilities affordably pull intelligence from all areas of their network. Now, Peter, look, when you started on this investment, you're a small company, a 2.5 year time commitment and a $10 million capital investment is an awfully big bet for a small company. So what key problem does TrueSense Gateway solve?
The TrueSense Gateway is a first to market initiative that is helping the electric utility industry at the highest level access very granular data from the edge of the grid. By definition, that is behind an electric meter, whether at a residential location, commercial or industrial. And in addition to accessing granular data around consumption and power quality, we're changing the way in which electric utilities define the edge of the grid. Today, utilities define the edge of the grid as the meter, the device on the side of our homes or buildings. With the TrueSense Gateway, we're going to be able to provide utilities to extend the edge of the grid to distributed energy resources, inverters for rooftop solar, power walls, an electric vehicle charger, and electric water heater behind the meter, inside the home, inside a building. And the reason why that's so important is as we think about advancements and expansion of consumption of electricity and electrification of everything, providing the utilities with the visibility of what's happening at the premise or the building, and then control behind that meter to mitigate imbalances between supply and demand, to protect assets, to prepare for a big storm. Right? That's what's the important thing here. And so the TrueSense Gateway really is helping utilities extend the edge of the grid so that they are that much more intelligent on how to manage the delivery of electricity to you and me.
That's fantastic. So certainly, one of the ways we look at investments, and there's a sort of, the term is, you want to trade events and invest in trends. So as you said, with the growing electrification of everything, plus, population growth, and I'm assuming aging electrical infrastructure, can you speak to the scale of the potential problem utilities face and maybe provide an example of, how they might use the information they're getting?
Yeah, so when we report financials and when we talk about market opportunity, we're talking US dollars. So apologies for that. But the reason for that is our customer base is predominantly in the US. So if we look at the United States in terms of thinking through how big the problem is for utilities in anticipation of an increasing amount of electricity that we all consume, especially as people adopt electric vehicles, like I've just recently done. It's an amazing statistic. 60% of all distribution transformers in the United States are either at or beyond their expected life, meaning what looks like a big beer can on the top of a utility pole on the streets where you're driving home, those devices are supposed to be in the field for maybe 40 years. 60% of them are either 40 years old or older. And so as devices get older, they start to fail. Thinking about order of magnitude, we're talking about $1 trillion issue for utilities to just rip and replace all transformers. It's not feasible. And so what we're doing, and why the TrueSense Gateway is so important, and why we've been developing it with 8 utilities that have been allocating time and resources over the last 2 years as we put money and engineering capabilities to bring it to market. It's how do we help the utility protect those assets, extend that life, or pinpoint which transformers are maxed out and stressed beyond repair, and then target which of those transformers to upgrade and replace. The way to do that, track data around power quality measurements, voltage, current, harmonics, waveform, good things, good statistical data that utilities would understand. And if a transformer is starting to stress, which we can identify with our TrueSense Gateway, take load off the grid, reduce the amount of power flowing through that transformer in real time, push of a button on a keyboard. That's the type of capabilities we're going to deliver to utilities with the TrueSense Gateway.
And do they do that by, altering maybe the speed at which electric cars are charging or that sort of thing?
Yeah, absolutely. So a couple of great examples from recent press release, our new partner, GE Appliances, and new partner, Savant Energy. So here's an example. Storm's coming, or Mother Nature is behaving, right? And no storm. Transformer starts to stress. What can a utility do? With our device and in partnership with GE Appliances, preheat water, electric water, or electric water heater, preheat that water before a peak demand event, whether that's just because we're all going home and starting to use more electricity at the end of the day, or because Mother Nature has erupted and is wreaking havoc for all of us. So that's one example, and turn a water heater into thermal storage. Preheat it, let that water sit, guarantee to the homeowner, they'll have 120 Fahrenheit water. That's the average temperature that comes out of an electric water heater. No disruption to the customer, changing the time in which utilities have to deliver power. That's one example. Savant Energy, EV chargers, throttle that charger in the event of an emergency, meaning reduce the voltage, but still charge the vehicle. So that might mean it takes longer to charge, but I'd rather charge my new EV over a longer period of time than not charge it at all. Similarly, with predictive analytics and all of the data that supports those analytics, which we're developing and delivering today, help the utility pinpoint when peak demand is going to hit, meaning max amount of electricity going through the network, and coordinate with me as a customer and an owner of an EV to pre-charge that electric vehicle or postpone when I charge that electric vehicle. Again, very granular control at the device level to help utilities mitigate imbalances between supply and demand of electricity.
Fantastic. So I've said there are only 3 questions. The last one's actually going to be a 2-parter because I can't help myself. Can you give us some insight? You're just launching this. I think you're waiting for final UL certification, which is expected any day. Once you get that, can you give us some insight as to when we might expect to see revenue from this new product start to show up in the income statement? And can you speak to, what portion of that, might be SaaS revenue or recurring revenue on an ongoing basis?
Are those the 2 parts, or is there another part coming? Okay,
those are the 2 parts.
I was thinking back to school, Rodney Dangerfield in his final exam with the economics professor. I only have one question for Mr. Mellon with 27 subparts. So, all right, good. I know what the 2 parts are. Here we go. Part 1, revenue. So we've been communicating and continue to remain down the path of bringing the TrueSense Gateway to a point of commercialization in the first half of this year. While we don't expect a lot of revenue, we will start to see revenue materialize in the second half of this calendar year. So it's real, it's tangible. We would anticipate seeing a reasonable amount of revenue next year that'll drive growth in the aggregate. And then I think the real inflection point is the 2026 timeframe when we get multiple utilities like United Illuminating, first investor-owned utility that we've ever sold to start to deploy this capability. We announced that earlier this week. As that utility goes through its process, right, it will expand in 2025. The swing factor is 2026. So that's timing. So it's near term, and we'll ramp accordingly. In terms of SaaS, so one of the great elements of our business, and I heard your reference of speculative for investors assessing risk, right? We're a $42 million US dollar revenue company today. Of that $42 million, 35% of the revenue comes from software and services. And as part of that 35%, 24% of total revenue in our company, right? So approximately plus $10 million USD today is recurring in nature. That recurring revenue is growing every year at about 20% compounded annual growth over the last 6 or 7 years. So it's real and it's tangible. As we start to roll out the TrueSense Gateway, we get paid for the device upfront when we deploy it, and we get a license. We get paid for the software license that is all of the software embedded on that device. Once the utility purchases the device, they install it, they power it, software is activated. It triggers a 22% annual maintenance contract on the software license for the software that's embedded out of the gate. So each device comes with a tail of recurring revenue for the life of that device, which is expected to be north of 10 years, so somewhere around 12-year time frame. So we're locking into a recurring revenue on a per device basis right out of the door, right out of the box, I should say. And then as we collect all this data and as we run it through our analytics engine, and as we think about what to do with that data, right, we envision multiple data analytics capabilities that are offered on a SaaS basis that would increase the recurring revenue on a per device per year basis. So good news is day one, we already have some recurring revenue locked in from the software that comes with the device, kind of like your iPhone. And then as we add more widgets, apps, whatever the case may be in the iPhone analogy, it's incremental dollars that we start generating on a recurring basis. It's hard to predict all the analytics 10 years from today, with the exception of the fact I guarantee there'll be more analytics on that device based on all the data that we're capturing.
Right, more and more data.
That's
Hey,
right.
listen, that's a fantastic synopsis. I really appreciate it. So thanks for taking the time to tune in with our clients. For anyone watching this that would like to learn more about our process and how we find companies like Tantalus, feel free to reach out to us at llc@cgf.com. Peter, thanks again for your time, and we're very happy to be shareholders.
Hey, Harold, thanks for the support. Glad you are a shareholder. Nice to see you.
Thanks.